All right, everyone, we're going to keep going here. Chapter 4, fundamental analysis. So we've got some of the housekeeping items out of the way. We talked a little bit about historic growth rates in the market, kind of setting some, it's a benchline expectations, hopefully getting everyone on the same page in terms of making smart financial decisions as part of a 5-year and 10-year plan. My goal is to help empower you guys with the skills, strategy, and mindset so you can achieve financial independence. Is it going to happen for everyone? No, I wish it would, but it's not going to happen for everyone. But my hope is that you all walk away from this class with a better understanding of how you can capitalize in the market, whether it's through your 401k, your long-term account, or as a very active day trader. Now, fundamental analysis is going to be a nice chapter here as we start to get into really dialing in on what are the characteristics of a strong stock to trade. Remember in chapter 2, I said that 2 things that we evaluate is number 1, the fundamental catalyst, which we're going to talk about right now, and then number 2, the technical setup. As day traders, we rely heavily on technical analysis, which is the review and analysis of stock charts. But fundamental analysis is still important, although to a lesser degree. So we're going to cover fundamental analysis first. We're going to get through it, and then we're going to get into technical analysis in chapter 5. So part 1 of chapter 4 is the fundamentals of a company. So today we're going to talk about introduction to fundamental analysis, common SEC corporate filings, the breaking news catalyst, and combining technicals and fundamentals as we transition into chapter 5. So as an intro to fundamental analysis, this is a little bit of a wordier, longer slide. I usually try not to have them super stacked with paragraphs, but I'll just go ahead and read this. So fundamental analysis is a traditional form of analyzing a company by reviewing its assets, liabilities, competitive advantage, and market strength. So who would be the type of person that would do a lot of fundamental analysis? Someone perhaps like Warren Buffett. Someone perhaps like Carl Icahn or Bill Ackman. These are long-term investors. So although price is important to them, fundamental analysis in a lot of ways is more important because they want to really understand the strength of a company. And then once they understand the strength of a company, it's just a question of, is the current price, is it worth it at this current price versus its downside risk and upside potential? But fundamentals come first for them. For us, technicals come first and then fundamentals come second. Truly understanding the fundamentals of a company requires heavy reading. So, you may have read books about, I've read books at least, and you may have as well, about some of these investors that sit at night, their nightly reading is, pouring through, 10Q and, these long financial documents and reading page after page and reviewing the balance sheet and sitting there with their, bifocal glasses and, a pen. And it's a lot of work. And the fact of it is that it can be very frustrating because while the fundamentals of a company can be really weak, the price can go up. And while the fundamentals of a company can be really strong, the price can go down. The market eventually will probably all, find the perfect price. But in short-term periods, the price can be very disconnected from fundamentals. And so as a day trader, we actually put very little emphasis on the fundamentals. As swing traders, and especially as investors, we begin to focus more and more on fundamental analysis. Long-term investors may not even look at the stock price really for weeks, as they rely almost exclusively on those fundamentals. And they don't want to get caught up in short-term fluctuations in price. So during the advanced classes where we talk about swing trading, we will talk extensively about fundamental analysis and what makes a company strong. But as a day trader, hey, girl, go on outside, this way. Sorry, guys. As a day trader, we're really not going to focus on those the fundamentals. All right. So I want you to understand the fundamental analysis to the extent that we will use it, which is limited. It's like sprinkling just like a teeny bit outside, which is enough for her to say it's not worth it. So that we already answered this question of who does use fundamental analysis. All right. So let's continue on here. So investors that ask about the fiscal health of a company, what are the characteristics of a fiscally strong company? So the way you look at this is you ask, if you're going to buy the entire company, what would you look at? What would you look at if you were going to buy the entire company? a great product with little or no competition, increasing revenue, increasing earnings per share, little to no debt, great free cash flow, great net profits. Right? Those are things that you would look at to help understand that this company is fiscally strong. Again, when I'm day trading, I don't look at any of these things. I don't take the time to look at them because it's a waste of my time. This doesn't matter really when it comes to a stock moving up right now due to a technical breakout and perhaps a fundamental catalyst such as breaking news. But these are the types of questions that a long-term investor would ask. Day traders, well, we ask about the technicals. What are the characteristics of a technically strong company? And we'll be reviewing this in Chapter 5. Now, when it comes to common SEC filings, these start to become of interest to us, not in a lot of depth, but because these can be the short-term catalyst that creates a technical breakout. So it's a fundamental catalyst, and that creates that breakout. So the 10K and 10Q, these are annual financials and quarterly financials. So we'll review these in a second. Form S3. This is a filing normally done in order to raise money after an initial public offering, often called a secondary offering. We'll get into that in a second. A 13D reveals who owns the most shares of the company, and it's filed within 10 days of any new 5% stakeholder. A 8Q is a report of unscheduled material events that will impact the price of the stock, so that's news. And Form 4 is insiders buying and selling shares. All right, so these are a few of the common filings that we will see when we're looking at what is the breaking news today that helps justify why this stock is up 15 or 20% or more. So the first one here is the 10Q and the 10K. And now we see this all the time. These are quarterly and annual earnings. Now, one of the things that is helpful here is that these can help us find the supply level or the float. So on the SEC website, you can use the Edgar search results right here. And so when you search, you can search by the company stock ticker. So you search by a stock ticker, and it's okay that this is hard to read because it's not a big deal, really. I was just kind of showing you what this looks like. But under the 10Q, you have this button for interactive data. And when you click on that, this shows you right here that as of March 15, 2020, the number of shares outstanding were 4.755 million shares. So that helps us understand approximately what the float is of the stock, if there's ever a question of what the float is. Now, data providers, and there's tons of different data vendors out there. Hang on. All right, I'm gonna ignore her. She's back outside, but she's sitting right there. I'm gonna roll down my curtain. I'm not even gonna look at her. Okay, so anyways, as I was saying, there's a lot of different data vendors out there. They're going to have sometimes slightly different numbers for the latest float of a stock. And so it's not uncommon that the float is sometimes a little bit unclear exactly what it is, but usually they're all pretty close. Now, the things that can change, there's a number of things that can change float, the number of shares available. But let's just, for right now, say that if you want to know the exact number, you can see it right here. And if approximate is okay, then you can use the data feeds that we have as part of the scanners that we run. All right, so when you actually get into the 10Q and the 10K filing, they're kind of interesting, but again, don't sweat reading through all this stuff. You can see the business description here. They will disclose their risk factors. So they're disclosing this to investors. They're actually saying, like Facebook, for instance, they'll say, one of our risk factors is that we run too many ads and that creates a poor user experience. So, there's some insights that you can gain. The selected financial data here will provide you with information about their quarterly earnings. And that's where we usually find interest in these stocks. Is, we actually, the headline is that they've put out earnings, okay, but the earnings were really good, that it was a big beat. And so that's the portion of, the 10K, 10Q that's really of interest, that they're up 200% year over year or something like that. So the earnings portion is what creates that strong catalyst. It's not all the other stuff. And again, you're welcome to read it, but I've never read an earnings report from like top to bottom. And I'm obviously a very successful day trader. But if I was going to try to be an investor or, try my hand at something like that, I do think I would have to start digging in a little bit more. Reading a balance sheet, similarly, don't sweat it. I don't read balance sheets. I can show you how to do it, but you're never going to need to. You can get away with trading your entire career without ever reading a balance sheet. Although, if you want to look at it and you're curious from the perspective of, does this company need to raise money? Because when you start taking larger positions, you do have to be mindful of the risk of secondary offerings, which we're going to talk about in a second. So if there's even a possibility that the company may be, carrying a lot of debt, be very, very tight on cash flow, then you may think, okay, there's a higher likelihood that the financials of this company look like the financials of someone that needs to raise money. You kind of can almost look at them as if it's a person. Is this person carrying a lot of debt? Credit card debt, do they have loans and stuff like that? Because if they're carrying a lot of debt, they're in a position where they're going to need to raise money. What's their profit? What's their cash burn? If they're just burning cash and they're not making money, then where's the point where something's got to change? But again, that's the long-term stuff. Now, I think it's important. I want to give you a holistic education here because some of you this may be your launching pad to go on to being a passive long-term investor. You may say, day trading was really interesting. I really like the class, but the long-term investing is more my style. I want to own Facebook long-term, and I want to sell, covered calls against my position to make a little bit of money and something like that. And that's totally fine. If this helps you get to that place, then I'm perfectly happy with that. And so this is part of that sort of, holistic education. But I would still say that as a day trader, you can get away with never reading a full 10Q, 10K, or going through the balance sheet. Checking for S3, which is the shelf registration. This is something that I don't do a lot of, but it wouldn't be a bad idea to do a little bit more of, because an S3 is what tells us that a company could do a secondary offering. It's actually the shelf registration, which comes before the offering. And so essentially, it's like pulling the pin out of a grenade. You know that it's coming. You just don't know when. Because shelf registration gives them the opportunity to do the secondary offering, I believe, anytime within 3 years of the registration. So if you go back and you saw that a company had a $200 million shelf registration, that may be valuable information as you're thinking about certainly swing trading the stock and holding it overnight. But even if you were thinking about taking a longer term day trade where you're going to hold it for a longer period of time, because one of the factors that we talk about with risk is your exposure risk. The longer you're holding a stock, the more you have that exposure risk that if something goes wrong and it suddenly drops, you could do a secondary offering, it could drop 40, 50% potentially. And that would be catastrophic from a risk management perspective. So the Form S3, so the first form that we talked about were the 10Q, 10K filings, Form S3 being the second common SEC filing, outlines the details of the shelf registration. Again, I wasn't intending that you were going to read this whole thing, so it's small print, probably hard resolution. I'm going to make it even harder. I'm going to just go like this because I don't even want you to read it. It doesn't matter. Don't worry about this at the moment. Usually when we see a shelf registration, if we pull up a stock, and I'm trying to think of one that recently had a secondary offering, but it's fine if I don't think of one off the top of my head. But I'm going to pull up this stock, for instance. This is WWR right here. So let's close this down. So down here in, you've got some news down here. You've got current report, which is 13D. We'll talk about that in a second. There's the 8K. There's the 10Q. So you see how you go back and you can see some of these recent filings that have been made. I thought I heard someone mention that there was an S3 out on this, but I'm not actually seeing it. So this is right on the Warrior Trading website, warriortrading.com/quote, and then you could type in any symbol you want. You can also search symbols from the search bar. So yeah, so in any case, usually when there's a secondary offering, we'll see that a shelf registration has been filed to raise X million dollars. So typically we'd be able to see it like that. Now, I can put the slides back up here. This, if you look really closely, says the offering of any securities described for total proceeds of up to $25 million. So what that is that's a registration to sell up to $25 million of stock. The question is, at what price? They don't list the price because we don't know what the price will be. So it could be priced at the market. It could also be priced at 50% of the market. So they can do these S3s, and they can sell stock to an investment banker. And if the investment banker is like, yeah, okay, your stock's trading at $6, I'll tell you what. And I'm thinking about this like investment banker. I'll tell you what. I'll give you 20 million, but I want 20 million shares priced at $1 each. And they're like, well, shoot, man, this guy's he's really driving a hard bargain. How about 20 million at $2? I'll give you 20 million, $1.50 a share, right? So then all of a sudden, the secondary offering's at $1.50 a share. And now, you know what that investment banker gets to do? They get to go resell those shares. They either keep them and sell them for a profit on the open market, or they can resell them to other investors out there. And so we see that that would be an offering through a investment bank. But we often see them even direct to the market, where they just sell the shares right on the open market. But again, they have to do that through some type of investment bank. So this tells us how much money they're wanting to raise, but not the price. And the price makes a big difference. So let's look at a couple direct offerings. These are in accordance with an S3. Now, again, this is looking at a stock chart. So those of you who are still like, wait a second, I'm not dialed in on these stock charts yet. What are these things? We're going to talk about that in Chapter 5 when we get into technical analysis. So this is a fundamental catalyst. So AKER was the stock symbol right here, AKER. Acres Biosciences announces $4.6 million registered direct offering. All right, so they've announced that they've entered into a definitive agreement with several institutional and accredited investors for the purchase and sale of 766,667 shares of the company's common stock at a purchase price of $6. Now that's actually not bad. I mean, this hit a high of $8.50, but $6 is not a bad price. It's not a bad secondary offering. So HC right here is the acting as exclusive placement agent for the offering. Gross proceeds are expected to be approximately $4.6 million. Company intends to use $250,000 in net proceeds from this offering to pay former member, blah, 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 pursuant to agreement. Anyway, so that's that catalyst there. Now, if we go back, was this for AKER? Now, I don't remember if this was actually when I grabbed this. I don't remember which stock this was for, if this was actually for AKER or if this was just for a random stock that had a secondary offering. So anyways, so in accordance with the S3, there's AKER, and then here's another one. So that one was 4.6. This one's now 4.8. All right, now this one's a little bit nastier. Announces entered into definitive agreement with several institutional and accredited investors for the purchase and sale of 1.3 million shares, approximately, at a purchase price of $3.53. All right, so $3.53. What happens? The stock tanks from 5 down to about $3.53. That kind of tells us the value. So, again, not great. All right, so here's an example. Okay, so those were a couple examples of S3s. We've got the S3 registration. Don't remember whether or not this was for that stock. And then you see the headline, which is the announcement of the direct offering. And that is always in accordance with the previously filed S3. I'm not sure how far apart the S3 and the direct offering need to be, or if they're ever filed on the same day. I'm actually not 100% sure. Again, because I don't Oftentimes when we see these offerings, they are in the afternoon, which is good from the perspective that I trade primarily in the morning. Although this one here was at about 11:30, which is not a great time. So, you do have to be careful there. And this is one of the biggest risks with doing dip trades, is buying a stock that's tanking and then realizing that news just came out and that it was dropping for a reason. So that is a risk that we'll talk about when we talk about the dip strategy. When we get into the Warrior Pro classes, I'm also going to show you, I have a bunch of examples of S3s, so we'll go through more of those. But this is just on the surface to let you know that these secondary offerings are a risk. When we talked yesterday about float, the number of shares available to trade, I don't recall talking about reverse splits. So let me just check to see whether or not we talk about either reverse splits or secondary offering. I know that I obviously cover that extensively in the classes for Warrior Pro students. So just to briefly cover it, when a company does their initial public offering, right, they're selling that fixed number of shares onto the market. Now, this would be a secondary offering. So if they had originally sold 10 million, now we're going to add 10.7 million. And then on the one before, how many shares was it? It was 10.7. So 10 so this is now 12. Now the float's going to go up to about 12 million shares. So when they do secondary offerings, they're selling more shares onto the market. The float increases. Floats can also increase when companies do stock splits. A company trading at $700, like Apple was at one point, if you owned 1,000 shares at 700, when they did the 7-to-1 split, the next day it was trading at $100 a share. And you'd be like, oh my God, $100 a share, what happened? And then you realize that you're holding 7,000 shares. So the float went up times 7 because the stock price went down. So the total of shares available goes up times 7 when they do a traditional split. When a company is really cheap, it's at 10 cents, and they want to get the stock price back above $1 in order to be in compliance with the regulations for NYSE, NASDAQ, and Amex, they might do a 20-to-1 reverse split. So the next day, the stock goes from 10 cents to $2. And you're like, oh my God, it's amazing. So if you were holding 20,000 shares at 10 cents, the next day you log in, you're like, I'm rich. And you realize you're only holding now 1,000 shares at $2. You have the same exact amount of money in the stock. So basically they trade in shares for price. So traditional splits, the float goes up, and reverse splits, the float goes down. We'll talk about reverse splits as part of a momentum strategy that I trade as part of the momentum classes in the Warrior Pro course. So really, this is just to make the note that a secondary offering does have the implication of increasing the float because it's diluting the value of the stock. All right, so now we talked about 10Q, 10Ks, we've talked about S3s, now we're gonna talk about 13D. A 13D filing, this is an example of Carl Icahn with a 13D on OXY, which is a petroleum company. These are especially significant because these are public disclosures of when an activist investor has taken a stake or is taking a stake in a company. So this right here, again, I wasn't really intending that you guys were going to need to read this whole thing. It was just to show you an example. And most news feeds, like the news feed that we have on our website here, if you scroll down, it would say, oh, current report 13D. You would click on that, and then you could click on this here, and then this would have, and we use Quote Media, as you can see, as our data provider. This actually has a link to the 10K or the 13D. So, you could go down here and you'd be able to see the number of shares and the price and everything else. All right, so let's look back over here. So we've got Carl Icahn and this 13D filing. So now let's look at the stock price for a second. So, actually it looks like in here I had the next slide, which I'll just read it to you for a second. So right here, item 3, the reporting person may be deemed the beneficial owner in aggregate of 88 million shares, which were purchased for an aggregate purchase price of $2.21 billion. My goodness. And then here, purpose of the transaction. This is interesting. This is a public filing. So the purpose of the transaction is that the shares believed position the shares in the belief that the shares were undervalued. Reporting persons believe the issuer's merger with this other petroleum company, Anadarko, was a terrible transaction, and the issuer's CEO and board of directors must be held accountable for the historic loss in shareholder value that has seen the issuer's share price plummet from $70 to $12 in less than a year, which has resulted in the destruction of $47 billion in stockholder value, which is a decrease of an amazing 83%. It's one of the worst disasters in financial history, and we believe the CEO and the board must be held accountable and the board must be replaced. So this is kind of an opportunity for them to, throw some dirt on the wall at the company, because this becomes a publicly available document. And this is OXY, and the drop, as you can see, from $85 down to $13. So pretty historic there. And so 13D filings are interesting because when we find out that a billionaire, an activist investor like Carl Icahn or a Warren Buffett or a Bill Ackman, and there's many of them out there, but those are three pretty big ones. When we find out that they've taken a stake in the company, these guys, they don't just passively take a stake. They take a stake in the company. They try to get themselves on the board of directors. They try to facilitate change. They're activist investors. They now have a major stake in the company. They have a major vested interest in seeing this company go up in value. Sometimes they'll petition to have the company get bought out. If you got on the board and petitioned to have the company bought out at $30 a share, sell to some other petroleum company, I mean, that right there would be a double in share price off the low. So when we see an activist investor coming in, it can provide short-term opportunities as day trades, and sometimes it can provide longer-term opportunities. Now, we will also see activist investors take short positions, as was the case with Bill Ackman in Herbalife when he claimed that it was going to go to zero because he thought it was a pyramid scheme. He ended up taking a multi-billion-dollar loss on that trade. Meanwhile, Carl Icahn was buying it. So they were actually trading opposite each other on the same stock. But it's some interesting stuff, and it can create short-term catalysts. So in that way, it's a fundamental type of news event that does create short-term opportunity. 8K filings are important, but they're informing us of irregular, unscheduled events. And so, in fact, a 10K is, an 8K is sort of irregular because typically these types of things would be announced as part of their traditional schedule of releasing information as part of earnings and things like that. So it can be a change in management, corporate structure, so on and so forth. Form 4 is a change in ownership. These usually are not particularly significant. We see them a lot, but they're just saying, this person made an acquisition of stock, buying or selling. It's usually not particularly significant. It's often when like the CFO or the CEO buys or sells stock as part of their stock options plan. Now, breaking news, number 3, the breaking news headline is the fundamental catalyst that can often create an incredible technical breakout. When we see stocks that have made really big moves, they're often a combination of some type of fundamental news with just an incredible perfect storm scenario of technical breakout. So, and this is sometimes funny because, is there a catalyst that justifies the technical entry? Purely technical setups are okay, but we always feel better buying a stock up 15 or 20% when we can say, well, what's the reason? Now, maybe the reason it's, okay, this is a little exaggerated that the stock is up, 45% on news that the company made a $100,000 new order to the US government or something like that. But at least we can understand that there is some type of catalyst. Even if it does feel a little strange, at least we know that there's a catalyst. Respected investor taking a stake, FDA approvals, clinical trials, upgrades, downgrades, those don't typically carry as much weight for multi-day trades. Although what we'll sometimes find happen is if a stock has had a big headline like Carl Icahn has taken a stake, that day it spikes up. The next day, the company puts out news of a FDA approval. It spikes up a little more. And then the next day, you've got news of an upgrade at, some big bank that they think the stock is going to go up to $50 a share. Sometimes those type of upgrades in that context can just sort of be adding like a little fuel to the fire. But when the upgrades are all by themselves, they don't typically have a whole lot of significance. So sometimes breaking news catalysts are going to come through an SEC filing, and sometimes they don't. Sometimes that is just a PR released directly from the company. It's sometimes a tweet from the company, and it does not always come through an SEC filing. So our news feeds, it's important that they're a news feed basically looking at the business wire. Seeking Alpha is not really a super reputable news feed because it's very opinion and biased. A lot of people that write have stakes in the companies, which they will disclose at the bottom of the article, but I don't consider it to be particularly reputable. But the Business Wire, SEC filings, those certainly are. So yeah, so those are a few types of fundamental catalysts that we will see. And you guys, you off the top of your head could probably think of a few different ones that you've seen maybe as you've been watching the markets over the last few weeks or months. So usually every day when I'm trading, and today was no exception, the stocks I was trading, AMRH, this one I traded as it squeezed, as you can see, obviously pre-market, and then on this pullback up to a high of 550. And there was a Form 8K out right here, as you can see. So they had news right here, which was this was a amended agreement, but more specifically, they had this news right here that they had IRB approval for testing a proprietary CBD formulation in brain cancer. So that was the catalyst that really got this going. And then sometimes you'll see something like this that might come out on like a market watch or something like that. This is sort of like 10:13 a.m. It's a little after the fact. That's more of a rehashing of the news, but sometimes those are helpful for you to read just to understand what's going on. All right, so that was one that we were watching today. WWR was another one, and there was here announces positive independent test results on this thing that they've got. So these are the types of things that we'll see both in the news feed that we have on our website and I have in my news feed here, although I do subscribe to this separately through eSignal. It's not free, so you guys can use our free service on our website. Another potential fundamental catalyst can be sector strength and weakness. Overall strength in the sector can create opportunities for trades and investments. Rising tide lifts all ships. So I mentioned this previously, that the airline stocks often trade closely together. All airline stocks, often when they're all going up, they're all going up. When one starts to roll over, they all start to roll over, right? So it's very common that we see those moving in tandem. Some oil companies move in tandem, and then some, of course, have inverse relationships sector to sector, where airlines go up when oil goes down, oil goes up, airlines come down. Obviously, the events of COVID-19 have had a very strong impact on certain sectors. Cruise lines, as they've sort of traded in tandem, airlines, hotels, casinos, but then many pharmaceuticals have gone up, and some home streaming services like Netflix and Amazon, well, Amazon as the whole company, and Disney, and some of these companies have actually, Zoom, have gone up quite a bit. So we're seeing some correlation there, both in sectors and services. Again, that gets a little bit more into sometimes using those for swing trades, because ultimately when I'm taking a day trade, I like more than just sector strength. I really like to see a very specific catalyst for the move. I feel more comfortable with a very specific catalyst. Not that sector-wide strength can't sometimes work, but it's got to be really strong in order for people to be watching that particular stock. Because ultimately, and we're going to talk about this in Chapter 5, I want to be trading the same stock that all the day traders out there are looking at. It has to be obvious. If it's obvious, then, when we have surprise short squeezes, a lot of people will be getting squeezed out. When we have surprise flushes, a lot of people will be panicking, and that can give a dip opportunity. So the more people watching and trading the stock, ultimately, the better. More volume means more liquidity, and that makes it easier to get in and out, even with very large positions. The very light volume stocks that are a little obscure, that not many people are watching, you can get some surprise moves out of them, but they're harder to predict. And they can also give you that rug pull and a surprise drop, which is certainly not a lot of fun. So number 4, combining fundamentals and technicals. Ultimately, that is what I'm doing every day, with a strong emphasis on technicals and a smaller emphasis on fundamentals. So it's kind of like an all-wheel drive car that is 75% rear wheel and 25% front wheel. We're really focusing on the technicals, but fundamentals are not to be ignored completely. So when I'm preparing my watch list, my process is that I want to see confirmation that there is a fundamental reason the stock is going up. If the stock is up and it's the leading gapper in the entire market, it's up 25, 35, 40%, or 50%, there has to be a reason. It can't be up for no reason at all. That makes no sense. So what's the reason? It can be an earnings report. It can be a news story about earnings. It could be some type of clinical trial, FDA result. I mean, it could be any number of different things, but I'd like to see that there is a clear headline that's justifying why the stock is up. Now, once I understand that there is a fundamental catalyst, then really from that point forward, I focus on the technicals. I may do a brief review to ask myself if I think there's secondary offering risk on the stock, but if I don't think that that's the case, then I really am just going to focus from that point forward on the technicals. I'm not going to overthink the fundamentals. I'm not going to try to form a really strong bias that, oh wow, it sounds like they might have a cure for, this type of illness. This stock is going to be $100 by the end of the year. It's going to get bought out by Pfizer. I'm not going to have this grand idea of something that might happen. I don't want to get into that. It's got a catalyst, good. Now I'm going to focus on the technicals. So if the stock appears to be moving up for no reason, I will be more cautious. I may still take trades because remember that, early short sellers who are using that fundamental logic may say, the stock's up for no good reason, I'm shorting it. Next thing you know, they've shorted 800,000 shares and now they're getting squeezed out because maybe someone else out there is buying 400,000 because they want to take a stake in the company, because they know something you don't know. Who knows, So focus on the technicals. If the technicals are strong, even if there is no news, it makes not a lot of sense, but the market can be irrational. So we focus on technicals and we'll keep trading it. All right, so with that, we are going to end chapter 4 and we're going to jump in now to chapter 5, which is exciting because this is where the rubber is going to kind of meet the road as we get into technical analysis. We're going to start breaking down charts and really dialing in some of the things that we've been kind of just scraping the surface of. So this is where things are going to start to get fun. So let's get into chapter 5 on technical analysis.